Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Monday, February the 13th, 2023. As the markets anticipate and try to adjust positions in advance of tomorrow morning's CPI data, the markets did, in my view, put in their fourth waves, their minute fourth waves, leaving one last little rally, which could turn into a humdinger of a rally, by the way, due to the reaction and the data that is due out tomorrow morning. So starting here in the NASDAQ, I'm going to start on the hourly chart, and I'll work my way back out to kind of talk about what maybe we could see and what we can expect and what happens next. So again, just in terms of the Elliott, we have been looking at a little bit larger rally, and this rally actually began off of the October lows. So from last year, and I guess I will start on the daily chart so I can show this whole move. This is where it actually started because we're in the B wave up, but we're really rallying up off of the end of December lows to finish the C wave. But the whole pattern was this larger ABC zigzag to form an intermediate wave B. So thus far, everything seems to be falling into place on that level. But here again, wave C, a minor C, will consist of 5 waves of minute degree. We're now completing minute 4, dropping back down to that hourly chart, minute 4. So we need to get in 5 waves up. What could this possibly be? Well, it definitely looks like it's a 5-wave structure in process. But at this level, only sub-minute wave 1 of minute wave 5. So it's 1 of 5. And then we get a little pullback, and then we get maybe that 3, and the 3 is going to toss the cookies. If that's going to be the case, again, I don't know what that number is going to be, but if I had to base it on the wave pattern and base it on what I see kind of building up around a quick pop up and a rejection, extremely possible. Extremely possible. It's the energy. It's what people are looking for. It's what many people are expecting, and they don't want to miss it should it happen, because that will be for sure a breakout. So all kinds of things that are going to be swirling around, forcing more buyers in, or forcing other hedge funds or whatever and whomever is going to come in at that time. So we also could see a rejection, run up and a rejection. We've seen that happen several times. It's like that number really wasn't that good. Why are you buying it? But the move happened so quickly that it just rejects when everybody realized that wasn't that great of a number to produce that type of a reaction. So there are different ways, of course, that it could go. But as I'm viewing it right now, I am continuing to leave open the potential that the market can make a very quick trip above 12,950, which is the current high from the 2nd of February, and making it up basically to 13,000 and above. So we begin to have resistance right above those levels at the 13,050 to 13,085, I'm going to call it. And then above that, we have a double. We've got a little bit of a double area in here, and that's at 13,320 to 42. And then we have another grouping above all of that, which should provide some pretty stiff resistance. And I actually do not want to see this above 13,741. But I can tell you it can get pretty dang close, because we have 618, and then we have a larger 618 at 13,000, I believe. It's going to come in at 46, I believe. So it could come in below it, still qualify as hitting it. Actually, we have another 618 at 13,600. So that if the market really wants to get going, again, I have no idea. We have a lot of people that if what they see or what an algorithm is going to interpret it as, you can produce a lot of weird things. I am not saying by any means that this is where the market is going to go. Can it? Of course it can. To think that it couldn't is ludicrous. Whether I believe, and guess what? Even if it does, it is not going to change how or what I'm looking for to come next. So again, my point is it could get up there for sure. It'll be fast, it'll be furious, and it'll be wild. Don't forget, on the CPI number back last year, the market, the NASDAQ went up 500 points in a minute. And the S&P over 150 and the Dow 1,000. And I'm serious about it. It was a minute. So these things are not impossibilities when everything is computerized, and you hit it and it just goes and does. So there's no taking it back. So in any case, those numbers are not totally unrealistic should things get nuts. Now, what my expectation would be is that I believe we if the number comes out as expected, they may take that as like, oh, that was a good thing, or some algorithm would. And then we make that new high, possibly, or start working our way up there. Again, depends on what happens overnight. If the Asian markets and the European markets and the books that get passed along the way are to buy, well, then yes, we could end partially the way there just overnight. So right now, we're not really moving too far away from the close. Now we're down, $9 in the NASDAQ and 75 cents in the S&P. So it's not really wandering around too far before more information is at hand. Now, I want to start taking this to task if it only gets up to here and then something severe happens and turns. I would have to seriously, I'm not sure exactly how I would count it. The market is ultimately going to tell me, but nonetheless, if it turns and hightails it lower on the basis of that CPI data, then it likely is announcing the next down leg, or the trend, which is down, has resumed. So the more important thing is, like, what level should it break before I'm not going to be really wanting to step in? So again, if for any reason that this is a more prolonged fourth wave or whatever, and it doesn't go and it just kind of keeps going like this, or if it goes from here and just starts doing a nosedive, then we're going to have to assume that this fifth wave ended here and the intermediate wave B ended here. And this is the beginning of a 1, 2, 1, 2, 3, 4, and if that could be a 5, it will work itself out. I can't tell you exactly because of how high these rallies are going, which keeps the upside alive. So all in all, I'm not, and let me see, actually, if I open that, I need to go this way. The rallies are nice. So tomorrow morning, I would be expecting something pretty severe. Now, I'm just going to go out, and in terms of, look at the 4-hour chart. Now, on the 4-hour chart, it kind of, you can see it a little bit clearer. If indeed this did complete it, it's not a stretch. I'm just not able to count on the hourly a clean 5. If I bump it up to the 4-hour, it's going to get a little bit clearer. But right now, it's still an ABC. And I could say that the C wave is 5. So it all fits. It's on a 4-hour chart, it's much cleaner. So in that case, ABC 4, 1, 2, 3, I think still that's the direction it's going to happen. And what's going to prompt it, of course, or the catalyst for it is going to be the CPI number. How we trade it is going to be possibly very challenging, because if it really goes lickety-split like it did previously the day I was talking about, it's pretty impossible to trade because both sides are going nuts. Now, yeah, so you're going to have to play the price action, and you're going to have to really determine at that moment of where you want to jump in and if you can get filled, because it's not something you want to chase. You definitely don't want to chase. But if somebody else is chasing and you manage to get in that roll up pattern, where it just like moves, you could get lucky and make a very large sum of money. So in any case, trading could be challenging until it calms down, until we get, more of our firms and players in. And then we can be able to tell direction a lot cleaner by the order flow. So here on the 4-hour chart, still looks like we're going to go up and then turn. If by chance it does from here, then it is possible to kind of say 1, 2, 3, 4 overlaps. It almost gets to the point where you're going to have to start allowing it, because as long as it doesn't really take out that high and go up further before it were to drop, because if it does that, we're looking at a different situation. If I can get it up or it does a 5 and then fails miserably based on that CPI data, and I have nothing else, then it could be the 5, and then the B wave goes there, and then we're off to the races. How will that become possible? It turns and it drops below 12,000. That would be the absolute minimal first move. Boom, get it below there, and then it just keeps going. Because remember, there's a lot of negative energy here as well. The positive energy, I think, is going to get tired, real tired. There's more negative energy due to the fact it's like the plays that get put on in advance were really going to produce a much bigger and weird response. And so in any case, I don't mean to go off onto that tangent, I'm sorry. Trading is going to remain kind of nuts because of a lot of factors, and they're algorithmic. And a lot of it has to do with the larger firms are putting the orders with resting orders, and they're playing it against expirations of options in all different markets. And so you're playing one against the other, and et cetera, and it just becomes a lot of shifting around of money. So truly, folks, truly, the goal becomes not who cares if it's bullish or bearish, who cares why they want to buy it. It really does fall down to just step in and take advantage of it. Make your money be done. Say thank you. Those are the opportunities that I believe are going to start to come when it gets wild and crazy. If it's going to be directional, and you obviously can see the direction, and you've got a clue, hey, it could explode, it could go higher. How high could it go? 13,300 for starters, 13,000 actually for starters. And that's 500 points from where we are. So these things can happen. That's just the silly computer energy. And the breakout, oh, it's a breakout energy. So we've got 1,000,001 different algorithms that are out there, and they're going to fire. Do you care why? No, you're just trying to trade. That's got to be the goal. So again, if you're coming in positioned and you're not in a hedge type of a position, then maybe you need to look at doing that, because the trading that's going to become kind of jilted right now, you can see that large traders will come in and put on a position, but they're changing it. They're rolling it around. They're putting it back in, taking off risk to up and down until it's more clear. Risk can be reinstated, but because these people are trading, these firms are trading, these traders are trading every day, and they're trading 2 expirations that come every day. So either we can kind of get into that mode and go with and not care. So it's all of our choices. But in that being the case, it doesn't matter if I'm bullish or bearish. I'm going to trade it. And I'm hoping that other people will say, it doesn't matter. You're giving me an idea if where it can go to, should this be taken extremely positive. Now you're giving me where it can go to if it's going to turn extremely negative, and how fast it can get there. Both are going to happen pretty fast. If this thing comes out negative, it's going to turn and drop. If it comes out positive or more positive on what they're expecting, it's going to run. That's what I'm going to tell you. We get to trade it. That's even better. Now, more signals would be that it starts to break down, and a break below the 200 from where we are to where it's is would be a severe drop. Is it possible? Yeah, it is. The market has basically ignored what every agency and what, like the Fed and what the Treasury and what we see happening has been saying. This is really where prices should be. Even the corporate level has come out and said, we're probably not going to make as much money as you all think. That's okay. Boom, we need to park this money. We're going to give it to you. Okay. But we see a lot of that too. But who cares? We just need to take advantage. Long term, it's going to happen, but it's going to produce a lot of trading. Now, in the NASDAQ, upside, I've given it out. We have resistance right now just because it's there, still is. 12,613. Then it breaks up and it's 12,762. Then it breaks immediately. And again, these aren't major resistance levels. Stronger resistance comes up at that high, 12,950, up to 13,085. That's the whole zone. So you get a little bit black hole-ish and then you right smack into some resistance. The next stronger resistance comes up another 300 points. And then after that, it comes up another 300 points. So these gaps, these black holes are $300 or 300 NASDAQ dollars. So, and it could go fast, but so can the response in coming back. Now, moving averages, they are still pretty much falling back into line to go back up. That can change, as you know, very quickly. Over in the S&P, it truly is the same noise. A little bit cleaner. Let's go down to that hourly and just kind of open it up a little bit and take a peek. So the third here, the fourth here, 1, 2, 3. So it's a lot closer to 4,200. Now, if it's explosive tomorrow morning, doesn't that make 4,300 within arm's reach? Yeah, it does. It truly does. 150 points puts us right up there. 4301. Wow. So all things are possible. We've seen these responses. Again, I'm just telling you, I'm not advocating that it's a breakout. I'm not advocating anything. I'm just saying these are the possibilities. It wouldn't surprise me to see a strong rejection right off that high, whatever it makes. We get a strong rejection, and that doesn't give up. And for wherever we end up, it just comes off, comes off, comes off, and comes off. Now, in the S&P, if it gets up there and they reject it and we start to break back below 41, back below 4,000, it's over. It's over. And that would be that we get ourselves back above 4209, which I believe is the existing high of this particular sequence. And we have resistance there at 08 and 09. And then it breaks 4255 to 67, we'll call it 70. And then you're sitting and knocking on 4,300. That's how quick. And we don't have much. A couple of doubles here, and then you get a little bit of a stronger zone. But that's about 4,300. Now, pushing this out, what really, if you remember, I don't necessarily want to see it above. That's just me. I don't want to see it above 4327, 4328. And we've got numbers that take it above there. So 4301, it definitely is in the realm of reality, right where we're from. But if I had to really think what the S&P could be telling me, I think that it could end below. So balancing this out against the reaction that you might get from the NASDAQ as well, that 4,300 and then a reverse, 4255 and then a reverse. So bringing it back down to the hourly chart, you see that the fifth wave is a little bit more or the wave 5 in total is a little bit more developed and higher than the NASDAQ got. So here again, if it's a muted response tomorrow and we flip and then flip because it's like the wrong response, right? Total rejection, and we get up above 4209 and then turn, that could complete the fifth wave and then it's done, or anywhere in between. Now, what do we want to use for a little bit of evidence of like, okay, it's gone, we're done, and it's moving lower? First thing, again, that being the case, we're not really going to be looking for it to go much past here and then break back first below 4,200 first and then next below 4,100 and then below 4,000. That would give you pretty clear signs it's done. 5, we're into that C wave down. And it's an intermediate degree C wave, and it'll kick off with a minor first wave. And actually, we're going to have to count it all the way down because it will subdivide. And it'll be mean and it'll be nasty, both sides. So here we sit. whether we go up here and we play around and we push and maybe even go above the level I don't want to, and then turn and come back flying lower, that will remain in place as what I believe. Anyway, I'm going to kind of leave it there. I don't need to be going on too long here, but that's kind of what I'm looking for tomorrow. We got to wait. We'll see. CPI, 8:30 a.m. tomorrow morning. Be there or be you know what. Now, beyond that, we don't really have anything else. Got the 4-week and the 8-week T-bill, the auction. So we'll find out what happens there. And furthermore, nothing. It'll all be rolling around the CPI number tomorrow. Moving averages are continuing basically to leave. In fact, this one on the 4-hour chart, that 200's pretty not bad at all. Market swing down and breaking it should break the back of the rally for now. All right, I'm going to leave it right there. Our next update will be on Tuesday, February the 14th.